Bidding wars are happening everywhere, so what's happening now? Is the market overheating? How do we even advise our clients when resale prices seem to be no longer driven by logic? In the pre-construction world, it's an absolute battlefield to get access to new releases, and we're talking about thousands of requests for just a handful of units. Is this pushing Canadian real estate to a bubble, or will Canadian housing market continue to see year-over-year house price increases? What's happening with the Toronto condo market? Are people considering to return to work, or will work from home have a permanent impact on downtown condos? Even the CMHC is now admitting that they got the spring 2020 prediction of the Canadian real estate market wrong. So stay tuned, we'll chat about these and more on today's market update. Welcome back, everyone. I'm Alan, broker and investor with Allen Law Real Estate, and thank you again for tuning in. Sorry I've been a bit late on this video. You guys know how crazy this market has been. Today we're going to talk about a few things, from the CMHC market prediction to the latest market stats, and whether or not work from home will be a permanent thing. And as always, please don't forget to click the like and subscribe button to stay updated with my latest videos. Back in May 2020, the CMHC predicted that mortgage deferrals would crash the market, and that prices would experience up to an 18% drop. The reality is, prices are up well over 20% since May 2020. So let's take a look at the February Market Watch report released by Treb earlier this month. Overall, buyers remain confident. There's a lot of good news coming in, from the vaccine rollout to the low borrowing costs. And the reality is, most people whose jobs allowed them to work from home were pretty much financially unaffected. Because of the pandemic, they really had nowhere to spend their money and suddenly had more money to invest than ever before. Then started to have some fun with it, if you know what I'm talking about. Anyway, let's look at the February stats, starting by sales volume. Condos experienced a 64% increase in sales volume. I say that's a pretty good sign they're coming back. There's a 43.8% increase in detached homes and a 62.5% increase in townhouses. Now let's take a look at the prices. Downtown condos are down about 3.7%, but keep in mind, not too shocking considering the peak of the prices was just before the pandemic. However, we can already see this start to reverse course in the market, with condos selling over asking recently. It'll be interesting to see how in the next few months how everything is going to play out. Speaking of condos, even in the pre-construction world, we just had a very successful launch of 8 Wellesley, with about 600 units selling out in just over a week. As for detached houses and low-rise, we're looking at detached house prices going up about 23.1% and townhouses up about 17.3%. What's happening now is the price gap between low-rise and high-rise has widened quite significantly over a short period of time. And as this continues to happen, at some point, low-rise is going to become too expensive and people will start looking at condos again from a point of affordability. And this has happened before. Eventually, that price gap is going to narrow. And this means that either the low-rise prices are going to start to come down or the condo prices need to move up. But as you all know, prices will only start to come down if there was a decrease in demand or an increase in supply. And as you all know, we are already in a supply shortage, so it's simple economics. So let's take a look at this. Treb says the current relationship between demand and supply supports continued double-digit average home price growth this year. So as I said, we're in a supply shortage, yet the demand keeps growing. The Fraser Institute also posted an article that says this: cranes in the sky might give the impression of rapid housing growth, but they don't change the fact that since 2002, annual housing starts had hovered around 57,000, while annual job creation numbers doubled from around 60,000 to 120,000. They go on further to say, clearly, there's a disconnect between supply and demand. And keep in mind, this is all pre-pandemic. We haven't even opened the borders yet for all the new immigration that's coming in. As you know, over the next few years, Canada needs to make up for the immigration that's lost this year, and then some. Over the coming 3 years, Canada will aim to welcome the following level of new permanent residents: 401,000 in 2021, 411,000 in 2022, and 421,000 in 2023. That's over 1.2 million new immigrants. So what I'm trying to say is, with an undersupply and an increased demand, it's more likely that the high-rises prices are coming up instead of the low-rise prices coming down. So is this rapid growth going to be a problem? Well, just last month, Bank of Canada Governor Tiff Macklem stated that they're welcoming the boom of the housing market and will lean on real estate because we need the growth. And here's another thing about the prices of downtown and the return to downtown condos. I was actually having a discussion with a friend the other day about working from home. And his take is that everyone working from home will eventually have an impact on the real estate market, particularly in the downtown core. His argument is that people are actually doing more work from home and being more productive since they're saving the commute time. And also companies are saving a ton of money from commercial real estate costs. And as a result of this, because some companies have already transitioned to work from home permanently. And that technology will eliminate the need for in-person meetings, and eventually surgeries could be done by robots. Anyways, I'm not going to go down that road. Nanos conducted an online survey of 507 downtown Toronto workers 18 years of age or older between January 29th and February 5th, 2021. There's something to be said about working downtown. In fact, some of the top responses for reasons why people wanted to go back downtown were the vibe and the energy, the culture of working downtown, and of course the convenience and the amenities. Another reason why people were tired of working from home is video conferencing. Even though we can argue that we have the technology to easily work from home, you can't deny the importance of face-to-face collaboration. People are going to miss going out for lunch or grabbing a coffee with their colleagues at work, or even attending work events and parties. Also, too much family time isn't always a good thing. Their kids are driving them crazy. There's too many interruptions, and people actually appreciate time away from the family to focus on work. So to me, it doesn't look like a permanent work from home model will be sustainable for everyone. And I do think a significant portion of the workforce will transition back to the workplace. In a sense, I do agree that an option of working from home is here to stay, and it will be a big part of some businesses going forward. But I don't think that it will be a permanent thing for others. Looking at the numbers, we can already see this. A 64% increase in sales volume in the downtown condos, and people are getting ready to go back. Leases are picking up momentum. Investors are confident that tenants will come back as the jobs and students start to come back. Given all this, it will be hard to see prices come down anytime soon. What do you guys think? Drop a comment below or contact me at broker@allenlaw.ca. And as always, don't forget to like and subscribe. Thank you again for watching.